Hello and welcome to another update video about Solana. So with Solana, we want to talk about the two scenarios again that we have on the chart. I also want to show you what would need to happen for a more bullish interpretation of the charts, because as I repeatedly say in these videos, all the altcoins, they have come down so much. We know that. I mean, they've come down between 85 to 99%, some of them, and they have come down far enough to end the bear market at any time. Therefore, on looking at the bigger picture, all of these coins have come down far enough to a degree that they have normally come down in the bear market. Okay, so that's also the situation with Solana. Solana still suggests to me lower prices, and we've now reached basically for this particular scenario, that's sort of still my main scenario, nearly the maximum of what we should be doing. So we want to talk about that. We want to also use this scenario to take a look at where do we now need to find support to indicate actually a more bullish case. Okay, so, and also with an idea how to trade this. So Solana moved, obviously, I'm going to zoom out in case anybody's new. Solana, in my opinion, is still in this so-called ending diagonal Elliott wave pattern. There are two scenarios that would eventually lead to further downside. So this is the first one, where off the August high, we are counting 5 waves down. 1, 2, already done. 3 done. There was a 4 here as well. And the 5 is currently in the making. So we're basically sort of really in the end of a downtrend, which can also end a bit earlier than anticipated. That's always possible. But currently, the rally is nothing that we haven't seen before. We have seen it here. Yeah, we've seen it many times before in a crypto downtrend, in a Solana downtrend. And also in terms of a more substantial low in place, the rally that we see at the moment is really not in any way stronger than anything that Solana has done before here in the bear market rallies. Yeah, look at this, compare this move up to this move. It's not even the same size. We've had these rallies, and in the last few months they've always been fake outs. So here, basically fake lows. So we just need to be very careful, because we are now in a range where it's extremely difficult for Solana to get out of it. Okay, so we are below the 88.7% Fibonacci retracement. That's at $29, and that's still quite far away. And that's the last Fib level on the Fib scale of the larger Solana cycle. So it's actually quite relevant for the market sentiment, which means we are really in negative sentiment here at the moment. Okay, so if I now zoom in and we take a look at this ending diagonal in detail, this count suggests we've done a wave 1 in the wave 5. We've done a wave 2. We are now in the wave 3. In the wave 3, we've got an A, B, C. That B wave has really maxed out what it should be doing. It shouldn't go any higher. Otherwise, I have to switch to the other wave count. So it allows us to understand. That's the advantage of the Elliott waves. It allows us to understand when we have to move from one count to the other. Then we've got here the wave 4 and the wave 5. So this is still to come. I currently still don't really see Solana bottom before we reach sort of the $4 to $5 range. At least at the moment, any low that has been made here, there is not enough information to say it has bottomed. Okay, so any sort of relief rallies are always possible, also in bear markets. So if we now zoom in, we can now see on the 1 hour chart the lower level Elliott wave count based on this scenario that we are, sort of coming down. This would be a scenario where we have now peaked. And as I just said, this B wave has really done the maximum it should do. It shouldn't really go any higher. If we look at the Fibonacci extensions, we had here the length of the A wave. We took the low of the B wave, and we said the C wave could do a maximum of 1443 really. Above that, we may have to consider something more bullish. So let me take that out. I need to change that. So, because we've got our A wave, we've got our B wave, and the C wave. So if we consider it like that, then I could even change it slightly. Yeah, if I change it slightly and say the B wave was maybe down here, and then change here the Fib extensions to there, and we see we really pretty much have reached here the 1.618 extension. Actually the 1.786. So in that case, I could say we had the A and B here. This was the C wave, but it really needs to come down now. Yeah, so basically I only have 3 waves here. So this could of course be something more bullish, but we have no evidence for that. Yeah, it's a 3-wave structure at the moment. So if we want to make a call that maybe a more substantial low for Solana has been made, we need to wait, of course, for evidence. So the way I would count it, first of all, in this particular scenario, is if I count the C wave that we had here, then a wave 1 to the upside, a wave 2 to the downside was here. This was a 3, then we had the wave 4 here, as already indicated. Yeah, or I play around with the 1, 2, and the B wave down here. It doesn't really change anything, other than the fib extensions a little bit. And then here now the let me think, 4, yeah, and the wave 5 to the upside. We've basically made enough waves to the upside to complete this now, because you have made, yeah, it's quite straightforward actually. If I label now the subwaves as well, based on the latest price action, you would say you had here a wave 1, 2, this was a 3, 4, and here we had an ending diagonal in a wave 5. So it's a complete count. It's a complete count. So now the market needs to decide. It's a 3-wave structure to the upside. In a bearish interpretation, this is now an A wave up, a B wave down, and a C wave up, and we would continue if the higher level assumption is correct. Let me take that out. We would now continue to the downside. However, of course, and that's again a benefit of the Elliott waves, they help us understand the price structure and key pivot points. So this is ABC up, it means we should now come down. However, this is based on conditions. Yeah? This is based on conditions. The condition is, of course, for example, that we don't break this high anymore. Because if we now break the high, which is at 1424 basically, we are basically going above and beyond what a C wave should ideally do. So what does that mean? We can, of course, because this is an impulsive structure, yeah, we can, of course, say that this here could also be something more bullish, but we have only 3 waves at the moment. So there is not much confidence here. So if I wanted to count that more bullish, then I would say that this here was a wave 1, because a wave A can also be an impulse, like a wave 1. We came down here in a wave 2, and all of this move up was actually a wave 3. It wasn't a wave C, but a wave 3. Until you get the 3rd wave complete, you can't really make it you can't really differentiate between them. Whereas now in the bearish case, we should break down. In the bullish case, if we say, okay, we want to explore the case, maybe a low has been made due to the extent of this move up, we're now waiting for the 4th wave down and the 5th wave up to come. What would be the target for the 4th wave? Because this is now critical. Anybody who wants to speculate for further upside could find potentially a new entry point here. Okay, so how would we determine that entry point? We would draw the fibs, the length of the 3rd wave, in this case the length of the wave C, but again I just showed you this could also be a wave 3, and we determine a new support or entry area. And that would be in this area between the 23.6% retrace and the 50%. So this could be an area where the price is reversing. But if it breaks below this level, it was probably just a fake out rally. And this scenario, the overall assumption is correct. But of course, we don't know the future. And in trading, in analyzing charts, we want to be prepared for various scenarios. There is more than just one scenario, because the bullish case is always an option, but obviously we need evidence. Evidence we would get if we now find support in this area. Because just to show you then the higher level wave structure, it would be a wave 1 up, a wave 2 down, a wave 3 up, a wave 4 down, and another wave 5 up. So the wave 5 could be traded. However, this is not high confidence. We need to be careful with that. First of all, we've got the FOMC meeting minutes being released later today. And also, the higher level assumption, at least my higher level assumption, is still down. Now, okay, I could be wrong. I mean, this is only my assumption. Therefore, this is not necessarily high confidence to find support, but it is a long trade idea. Especially as you can see that this descending trend line here, which is quite meaningful, I think, runs through this support area, so it could provide some additional support. So this is the area between 12.99 and 11.61 where a long trade could be entered. Now, I'm not telling you to do that, but it's a long trade idea based on Elliott waves. And we could be moving up into a wave 5 target. So what would be a possible target now for that 5th wave? Well, It depends a little bit on how low we now go. But so just that you know what you could expect is we're looking here at the area, depending on how low we go. So let's say we go to the 23.6% FIB level at $13 and then rally from there. Would be the area between the 1590 level and the 1771 level. That would be the ideal target range based on how we calculate. That's one way of calculating the target. So that would lead us between 1590 and 1771. There's another way in that we take the length of the third wave and go to the same low. And that would take us between 1625 and 1826. So that's broadly the range. But yeah, that is certainly the area where the decision will be made. Yeah, I'm not making the decision. I'm purely telling you here what key levels you need to watch out for. And of course, bear in mind there is key resistance at $15. Breaking the $15 level would only mean we're getting a larger bounce, in my opinion. But this is interesting potentially, yeah. But you know, I would possibly not trade this. I'd be a bit careful just because also we've got the FOMC minutes today, so that could generate some more volatility in a few hours. And also anybody who wants more comfort, yeah, could just wait until these 5 waves are complete and then just enter in the wave 2 retracement, because these these 5 waves up. 1 second. These 5 waves up, they would only be a wave 1, and we would then, in all cases, come down in a wave 2 if this is going to become an impulse. How high that eventually will go in a wave 1 is of course a sort of an unknown factor. We have ideal targets, but these can always overshoot a little bit. But yeah, that's sort of where we are. If we now look at the other option that I had yesterday on the chart, is of course all of this could just be a larger ABC pattern. So, and I mentioned to you, based on Fibonacci retracements, until we really get above $20, that's sort of the next threshold then. We can't really confidently say that a low is in, but obviously there are clues along the way, as I said, and this would be one first piece of evidence that we have a low in place. Yeah, so hopefully that was useful. That's my update about Solana. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, please check out the channel membership. And if you're interested, also check out our trading course that we offer on morecryptoonline.com. Thanks a lot for watching. Bye-bye.